Russia's construction industry is facing a crisis, with the launch of new projects dropping by 23% compared to the previous year, President Vladimir Putin stated during a State Council meeting. Russian companies are experiencing a sharp decline in real estate demand, largely due to the consolidation of preferential mortgage programs and the central bank's decision to raise the key interest rate to 21%.
In the absence of loans, developers' sales also plummeted. For example, in the Moscow region, they sold a quarter fewer apartments in new buildings than the year before, and in Nizhny Novgorod, by 40%. In the country as a whole, sales of new apartments decreased by 22%. In 2025, every third developer will become unprofitable. From the Moscow Times publication in a Telegram post.
The gas business has also become unprofitable. Gazprom, which has been filling the Russian budget for decades, is now forced to produce household appliances instead of extracting and selling fuel. Over the past year, the company has lost a trillion rubles. Its new business ventures are based on Western production assets that were seized.
Gazprom plans to restart the enterprise this summer, which before the war produced more than 1 million refrigerators and washing machines per year. Problems may arise with the software for the plant. Bosch left Russia and took the software license with it. Gazprom Bytovye Systemy JSC already produces gas stoves. Last year, the company received 6.6 billion rubles in revenue and 140 million rubles in net profit. From the Moscow Times publication.
The Kremlin is also losing out on oil revenues. From the beginning of April 2025, the price of Russia's Urals crude has fallen below $50 per barrel, and analysts warn this might not be the bottom. Several factors are to blame: global economic instability, the U.S. administration's new tariff policies, and increased oil production by OPEC countries.
Even in the most favorable scenario proposed by Goldman Sachs and other investment banks, a barrel of Urals could cost less than $50 at the end of the year. That is approximately what it costs now, according to Bloomberg. At the same time, the Russian budget for 2025 includes oil and gas revenues based on an average Urals price of $69.7 per barrel and an exchange rate of 96.5 rubles per dollar. The Russian authorities, represented by Deputy Finance Minister Vladimir Kolychev, have already announced that there will be no such average price. According to Kolychev, the new benchmark is $60 per barrel of Urals. From Deutsche Welle publication. What we're seeing isn't exactly slow, but it's a steady decay of the Russian economy, a drift into stagflation. The fall in oil prices could tip it all over the edge. And it's clear the Russian leadership is seriously panicking about this.
Meanwhile, according to Russia's finance ministry, the federal budget deficit for just the first quarter of 2025 exceeded 2 trillion rubles. Government spending rose by 24.5%, while oil and gas revenues dropped by nearly 10%.
April's figures show they're spending like crazy. According to preliminary budget data, the Telegram channel MMI reports that over 230 billion rubles were spent per day in the first 2 weeks of April. That's an astronomical amount. Multiply that by 30, and you're looking at 6 to 7 trillion rubles a month. I don't even know what the total April expenditures will be, but most of this money is being poured into military prepayments.
The Financial Times reports that the Russian economy has already been operating at full throttle for some time. Recent growth had been driven largely by government's war spending, but that pace is now slowing. Combine this with falling oil prices, frozen central bank assets, Western sanctions, and global economic instability, and the Kremlin's outlook looks grim. As Russia's National Welfare Fund dries up, Moscow is expected to start cutting expenditures. Experts predict that social programs will be the first to face the axe. Reported by Alexandra Zaslavets, Larissa Petruk, UATV News.